Hello and welcome to the 4-Minute Morning for today, which is the 30th day of March. It's also a Friday. It's also Good Friday, and it's also Crypto Day. Every day is such. The market's, of course, trading. It does so 365, 24/7. In fact, when is the last time there has been 60 cumulative seconds where Bitcoin has never been traded? That would be an interesting answer if one would know such. I don't. But anyway, everything within this video as far as the content is within your own risk, own reward for anything you may do. And Bitcoin prices have been in a decline, obviously. The Fibonacci levels, I'm going to just quickly bring them up, 79.61. And even around 7,800 and change, we're going to see maybe the key levels of resistance I'm going to be looking towards. However, within this situation, you have had the only good rally since the decline, which is defined or shown within this 18 average, as it had several periods above it and stabilized it within it for a little bit. The double top formation did resist its neckline and have a leg lower. That pattern is done. It's already done its thing, if you will. There could be a inverted cup and handle from the starting with the November lows at around 6,000 up to the close to 20,000 mark, then back down to the February lows again. And if it breaks down below that neckline, then that is will be the setup for that 3,000 target that I've been talking about, which would be 38.2% long-term fib down, and 23.6% fib down did hit at 6,000. Will it hit a second time? Well, the more often support is tested, the more likely it is taken out, but that doesn't mean that it will. Price action has pretty much broken down below support between 78 and 74 as it has went down to 67. This level here, you know, it's in the middle of this low and this little key area. It had resisted the 18 average band in the third week of March on the higher end, and it resisted it the low end before this significant leg lower. So therefore, is it going to do it again? Well, the resistance here around 8,000, which is approaching where the 18 would be falling towards, would be right in line. Oftentimes it does come to that point. So I don't know if it's going to make a move here, and then most likely there's a good chance it's going to be resistance there, or if it's just going to go down towards this point. And whether it's going to hold or not, I don't know. I mean, if it doesn't, I just know the next key level is that of 3,000. Taking a look at this on a 60-minute time frame, and within this it had the sideways consolidation March 26th through the 28th at around the 8,000 mark, and since the decline it has really had nothing to even attempt to revert this down move from 8,000, of course, down to 6,600 until now. So it's came up to the 18 average, and it's now had about 8, 9, 10 periods. The 18 average practically starting to flatten out. It's got to do a lot more in that to revert trend. It still has to, it's doing stage 1 right now at best, which is band flattening out. But because it's doing a little bit of a test right now, if price action starts to hold and stay below 68, 75-ish, even 6,900, then there's definite reason why I don't think this 6,600 will be supported, and we probably then go down towards 6. But with the 18 average of highs and previous resistance at the low 7,000, if it can hold that point, then maybe it can make its move to the rally closer to the 8,000 mark. Thank you for tuning in, and have yourself a great day. Bye-bye.